I want to try to quickly, but I probably won't do this very quickly, but to give you a heads up on some activity that you're going to be seeing here real soon. If you remember in the legislative session, there was much discussion and debate about what to do about the negative cum fund levy adjustments that happened to some taxing units and that their cum levies were being reduced, and there was discussion about correcting or changing the formula where that would not occur and to do it retroactively so that it could be corrected for pay 2012 taxes. But that discussion led to the discussion that there was possibly be a delay in tax bills, and no one really wanted that because everyone was on track for on-time billing and one thing and another. And then the other part of that debate was, we'll let those affected taxing units make that up next year in 2013, and they'll be able to not only have the increase in their cum levy that they would get for 2013, but then they would be able to add to that the levy lost from 2012. And that discussion then turned to, that's going to have an impact on circuit breaker, and that there'll be more exposure to circuit breaker and revenue loss and so forth and so on. And then at the end of the day, with how it usually seems to happen in the final hour, and literally in the final hour almost, they came up with this compromise where the state would loan the affected taxing units their lost levy, and out of the general fund we would make a loan, and then from the loan they would those units that take out the loan would put it on a levy next year to repay the state, and that's what happened out of the Clear Blue. We left the week not knowing what they were going to do, and come in on Monday and find out, lo and behold, we're now going to participate in this process. So here, what's been occurring is the Department of Local Government Finance, DLGF, has been identifying the affected taxing units and has been determining what the dollar amounts would be that the unit could borrow or would need to borrow if they elect to restore that levy, and that information is going to start being circulated real soon to you all and to the affected taxing units. And right now we've got a count of a little over 800 taxing units that are potentially eligible to get one of these loans. The units have until June 30th to decide if they want to do this, and need to adopt a resolution and sign the promissory note to get the loan. And so the units will have to do that by June 30th, and then we will have to, by July 15th, disperse the loan proceeds to all those taxing units. So a whole lot of activity to happen in a whole lot of short period of time. And my question was, when we first met on that, what in the world was the big rush? I mean, had they been able to get the money anyway through the levy, it wouldn't have gotten it all until December anyway. But you know how legislature works. So that leads me to where we're at. There is going to be a memo going out by OMB and by budget agency to you and the taxing units, notifying you, if you're one of the eligible units, to notify you that you have an option to adopt a resolution to take out this loan and to get the money, and then agree to put on a levy to repay it next year. And that's going to go out as soon as just a couple weeks or maybe slightly more than that. But I have a list of all those potential units, and have been doing researches to see who we already have set up in our vendor file to be able to process payments to, and have identified the taxing units who we do not have a vendor record for. And those are as it turns out, those are all townships and fire territories and fire protection districts. And so I will be sending out to you a request for you. I will give you a list of who it is. You know, if we need that information for one of those units from your county, sending out a memo and emailing it to you, requesting that you help us with circulating our vendor information form to these taxing units, so that they can then return it to me by fax or email or mail if they wish, and and so that we can get those units set up in our vendor file. So please help me out. Not all of you will get a memo. It's only going to be the counties where we do need this information, and so some counties will be eligible for these loans. Schools, the taxing units that it covers is just about everybody. Counties, cities and towns, schools, townships, fire protection districts, fire territories, and libraries that in the whole group. So that's all going to happen here real soon, and a lot to get done in a short period of time. Okay, on to the main subject. Back in end of March 28th, I believe to be exact, I put out a memo about the putting on or applying late payment penalties to prior year taxes and current year, and added prior year taxes and added current year taxes, and how that memo came about, because as Tammy mentioned earlier, we've been getting some questions about that, and it became apparent that there was some confusion concerning that, and there needed to be addressed. Also, in the course of counties putting on the back taxes and civil penalties for the ineligible homestead credit, I began to learn that how some counties were putting on the penalties on those back taxes, and found that and learned that there were some counties who were for instance, if they were putting on 3 years, 4 years, 3 years back taxes, that they were adding penalties to the amount that they were putting on. And when it did, I'd come up and be brought to my attention, I'd say, to them, or more like write to them. We don't talk to each other anymore. That's unfortunate at times. We do everything almost by email, but write to them that you can't put a late payment penalty on taxes that you've never charged. The taxpayer is given the opportunity that they can pay that without penalty, late payment penalty. Now, on that ineligible homestead credit, don't get confused, the civil penalty does go on right up front. It's not a late payment penalty, it's a civil penalty, and it goes on front. But you can't put on 3 years of late payment penalties when you're putting on 3 years of taxes. It's just tax and civil penalty to begin with, and if you're adding prior year tax or current year tax that isn't the ineligible homestead, then it's still, you just put on the tax. You can't put on the penalty up front. So that's what brought that about. The other part of this presentation, and this wasn't covered in the memo, is I'm going to touch upon how penalties added on special assessments, how those have to be handled when it comes to settlement and distribution. So I'm going to be moving through this fairly quickly because I think for one thing, there is the memo out there, and just want to bring it, kind of bring to your attention some of these. These are the different topics that I'm going to cover about what the late payment penalty rule is, and the timing when you're putting those penalties on, and what happens when you collect it, and the settlement and distribution process. Well, the late payment penalty rule we're all familiar with. I call it the 5 and 10% rule, and where in the statute that give you there that states that an installment tax is not completely paid by the due date, then there's a penalty added for that in the year of the initial delinquency. And those two terms are important: installment, initial delinquency. And it's equal to 5% if there is no other delinquency, and if it's paid within 30 days of the due date, and then if not, then it's a 10% penalty. We all know about that rule. Then the other rule on the penalty that's added on the first and second installments in each year that's following the year of the initial delinquency, that the penalty is 10%. What that statute's talking about there is that's on prior year tax. Whenever you have unpaid prior year tax, each time there is an installment due date, you're adding another 10% on that unpaid tax. So when the timing of applying late payment penalties, like I said, this initial delinquency is a key term in determining what penalty or when the penalty is applied. The initial delinquency is the year when the taxpayer is first billed, and then the late payment penalty can only be charged after a taxpayer has been billed and the tax has not been fully paid on or before the applicable property tax due date. Applications on that, penalties on that original current year first and second installment, and when I say original, I'm meaning that tax that you reported on the abstract for current year first and second installment. There, the penalties are applied on that at each of at the installment due date if it's not fully paid, and the 5 and 10% rule applies. The application of the penalties on the original, and there again, I mean included on abstract, prior year tax, that's also very straightforward. Those penalties are applied at each of the first and second installments if the tax is not fully paid, and the penalty in those instances a straight 10%. Now on to when you're applying penalties to added current first and second installment, the application of those penalties is all dependent upon when you added that tax. The penalties on the current year first and second installment I'm discussing in these next slides. An added current year first installment is eligible for a first installment penalty if the taxpayer is billed at least 15 days before the first installment due date, and the added first installment tax is not fully paid on or before the first installment due date, and the 5 and 10% rule does apply. If that added first installment is billed after the 15 days before that first installment due date, then the added first installment is first eligible for a late payment penalty if it's not fully paid by the next first installment due date. And if that occurs, then the penalty is 10% because that unpaid first installment rolled forward into the next year, and it's now prior year tax in that following year, and the penalty on prior year tax is 10%. On added second installment, the second installment is eligible for a penalty if the taxpayer is billed at least 15 days before the second installment due date, and the added second installment is not fully paid by that second installment due date. And once again, the 5 and 10% rule applies. If that second installment is billed after 15 days before the second installment due date, then that added second installment is classified as prior year tax due at the first installment due date. That treatment of the prior year tax or added prior year tax for the purposes of this late payment penalty is determined when the taxpayer is billed for that added prior year tax. If that prior year tax added and billed between 14 days before the prior year second installment and 15 days before the current first year installment due date, then that is treated the same as current year first installment tax for the purposes of applying the late payment penalty. And the late payment penalty is added if it's not paid by the first installment due date, and the 5% or the 5 and 10% rule does apply for the penalty. And if not fully paid before the second installment due date, a second late payment penalty is not applied. And then if it's and then that prior, if it goes unpaid, then that unpaid tax rolls forward and becomes a prior year tax in the following year. Prior year tax added and billed between 14 days before the current year first installment due date and 15 days before the current year second installment due date is treated the same as the current year second installment tax for the purposes of applying the penalty, and the late payment penalty is applied if it's not fully paid by that second installment due date, and that 5 and 10% rule does apply. And if it's not fully paid on or before that second installment due date, then the unpaid tax and the penalty roll forward as prior year tax and penalty. Now on to special assessments. The late payment penalties added to unpaid special assessments is also determined by when the special assessment is added to the tax duplicate and billed. And what we mean by special assessments in this case are like sewer liens, weed cutting assessments, line fence assessments, and delinquent Barrett law assessments that a city or town, typically a city or town would impose. In this instance, what we're talking about here, special assessments do not include drainage and ditch assessments or conservancy districts. And if the added special assessment is billed 15 days or more before the property tax installment due date, then it's eligible for a late payment penalty if that special assessment isn't fully paid before that due date, and the late payment penalty is 10%. The special assessment continues to be eligible for a late payment penalty until it's fully paid. For the ineligible homestead credit on that back tax and civil penalty, the rules for adding late payment penalties to those are the same as the rules for allowing same rules as the late payment penalty rules for the added prior year tax that I discussed previously. And and that late payment penalty, when it's applied, is added to the unpaid back taxes and civil penalty. When the late payment penalties that are collected for on the current year taxes and the prior year taxes and the added current year taxes and added prior year taxes are all recorded by the treasurer as the same as property tax collections in on the treasurer's cash book. The late payment penalties that are collected on special assessments and ineligible homestead back taxes and civil penalties, those are recorded by the treasurer as other sources on the treasurer's cash book. Then when those payment penalties are certified at settlement, the treasurer will certify as tax collections the penalties that were collected on the current year taxes and the prior year taxes and on those added current year and prior year taxes, which they've been doing all along. This is nothing new. But on the special assessment, the penalties that are collected, late payment penalties collected on special assessments and the ineligible homestead credits, the treasurer is going to certify those on the 49 TC at settlement in the other collections section of the that 49 TC. And this here we have this in our settlement instructions on the instructions on the 49 TC. We've included this fact that they do need to certify those taxes, or those collections, excuse me, separate in that other sources area. You as county auditor, you're going to distribute the late payment penalties to taxing units, regardless. You're going to distribute it to the taxing units regardless if it's late payment penalties collected on normal taxes and added taxes and so forth that you've been doing all along. That's nothing new. You will be distributing that, and that just occurs automatically because the treasurer has included those in their certification of tax collections and on your apportionments and on your settlement sheets and reports and processes in your system. That's getting added in the normal reconciling process that occurs at settlement. For the late payment penalty collections on special assessments and the ineligible homestead credit back taxes and civil penalties, those penalty collections are also going to be distributed to taxing units, and that's going to occur by you having what we call a before apportionment adjustment on the apportionment sheet and on the settlement sheet. And this before apportionment adjustment is going to be equal to the amount that the treasurer certified in the other collections section of the 49 TC as the treasurer certified as collections, late payment penalty collections on special assessments and late payment penalty collections on the ineligible homestead and civil penalty. And so there is an extra step that you have to do with this before apportionment adjustment in order for that to flow through to the apportioning of the amounts to the taxing units funds and distributing to the funds. Well, I believe that concludes my presentation. Enjoy being here. I think if you have, we're not going to be here tomorrow. Matter of fact, we're going to leave here in a little while. But I'm quite sure if you have questions on this and you write your questions down, that Tammy and Debbie will make sure those get to me, and we'll answer those questions. But if you you can always send an email or give me a phone call, or Brenda or Janie, and we'll discuss these issues and any others that you might have. Thank you for having me here. Hopefully you enjoy the rest of the conference and have a safe trip home tomorrow.